All right, this one right here is interesting because it's not just about getting a loan, it's really about how you position yourself before you even ask for anything. And that's the part most people completely overlook. Like I'm scrolling through this, and the first thing it's emphasizing is the relationship with the bank. And that's huge because a lot of people think you just show up, apply, and hope for the best. But that's not how approvals actually work in the real world. What they're really looking at is how you've been moving before the application even hits their system. So as I'm going down this, you can see it starts with just getting inside their ecosystem first, having that personal account, then layering in a business account. And what that does is it creates history and visibility. And that's what banks trust. They don't trust random applications, they trust patterns they can see over time. And that's why you'll notice it keeps mentioning things like deposits, activity, multiple accounts. All of that is basically signaling stability without you having to say it directly. And then right here, where it starts talking about account types and adding more products, this is where people either get it or they don't, because it's not about stacking random accounts. It's about building a profile that actually looks active and real, like savings checking, maybe a credit product, all working together. So when the bank reviews you, it doesn't feel empty. And that's honestly where most people fail. They rush straight to the loan part without building anything behind it. So the application ends up looking thin or inconsistent. Now, as I keep scrolling, you can see it brings up timing, which is another big one because approvals are rarely about one moment. It's about what you've shown over a period of time, even if it's short. So giving it time for activity to build and keeping things clean, like low balances, not too many inquiries, that all feeds into how their internal system scores you. And that internal score matters just as much as your credit report, sometimes more. Then it shifts into the actual loan side. And what stands out here is how much documentation is involved, which again goes back to structure. Everything has to line up: the business, the vehicle, the insurance, the numbers. If anything looks off or rushed, it slows everything down or gets flagged. And that's why organization is everything here, because when everything matches and makes sense, the process feels smooth. But when it doesn't, that's when delays and denials start happening. And even toward the end, where it talks about approval timelines and closing, you can see it's not instant, it's a review process. And that's really the theme of this whole thing. This isn't about shortcuts, it's about building something that can actually pass review, whether that's for funding verification or approvals in general. So if you're looking at this from a bigger picture, this is really about learning how to structure yourself properly before going after capital, because once you understand that you can apply it to way more than just one type of loan, if you want the full breakdowns, templates, and the updated methods that actually go deeper into how this all connects, check out the Patreon link in the bio. There's a 7-day free trial so you can go through everything first. And if you've got questions or want help with your situation, join the Discord too. Link is in the bio. We're active in there and can guide you or even handle parts of the process with you. If needed, just don't rush it. Focus on structure, and everything else gets a lot easier from there.